Julie, how are you?
Good. How are you?
I'm awesome. I'm awesome. Thanks for joining me. I know you're not big on doing podcasts and shows, so this
Thank
fun
you for having
conversation.
me. I know
Yeah,
I prefer the 140 characters. That's kind of like the medium where I'm happy, but
yeah,
you know,
good.
gotta go outside your comfort zone
Well,
sometimes.
yeah, and you and I met on Twitter, which I think is kind of fun,
Hmm.
and it's one of the things I love about kind of the investment, you know, like what do we call it, FinTwit.
Yeah.
I've met so many great people, and you end up having fun conversations. And so, anyways, just tell folks, for folks who don't know you, tell everybody a little bit about you. It'd be great.
Yeah. So I'm Julie. I live in LA. I spent the better part of my kind of early career so far in the VR and AR space in various capacities. A couple years ago, I decided to start what is essentially like a boutique user research consultancy. So I work with companies who want to do like huge studies on, you know, people who use their product or competitors' product or what have you. And then kind of in addition to that, just in the last, I've been investing in the public markets for a little over 10 years. And then in the last year or so, I started writing about the stocks I like and why. I started a Substack, and then I also started tweeting. And then, so yeah, I also spend a lot of time, being a part of the FinTwit community, I guess.
Yeah,
And
yeah,
I guess I also started writing my first angel checks in the last year as well.
yeah. And what got you into investing 10 years ago? But one of the things that I'm super passionate about, and I know you are as well, is people who aren't investors, helping them become investors and sort of crossing the
Totally.
line. And there's this huge barrier, to investing, and where do I start and how do I start? So I'm always curious to get people's stories. How did you start investing 10 years ago?
Yeah, I totally agree with you. That's something I'm really passionate about because I think that, much of the financial industry is made to look like it's very, very complicated and only for,
Totally.
smart people. But there's not really a lot of data. There's no data to support that. You know, Normal people make great investors all the time. So I got started in high school. I was really interested in entrepreneurs, generally speaking. So I would, watch a lot of YouTube videos and things like that. I didn't really know what investing was or really even what business was, but someone suggested to me that I might want to study that in college. So I ended up taking, when I was in high school, I ended up taking an intro finance class at a university in near where I grew up.
Oh, wow. On your own.
And
Just,
yeah,
just,
yeah.
okay, cool. Awesome.
And so it was a really intro finance class. And one of the first things that you always learn in finance classes is just time value of money, right? So you put in X number of dollars, you get, this return for this many years. How much money? What's your future value? What do you have at the end? And like, I'll never forget this. Just one of the first things they put up was a chart of the S&P, the S&P over some enormous, 50 or 60 years versus investing in Berkshire Hathaway over the same amount of time. And the difference in future value just blew my mind. Like, I thought that was the coolest thing but like, I couldn't believe that this was just something that no one told me all these years.
Right.
Like, I was like, you guys know about this? And so I just thought that was so cool. And then I ended up going to the Wharton School at UPenn, which is like fantastic business undergrad. Learned a ton there. Really got to, I wasn't making a lot of money when I was in, at my high school job or my jobs in college, but, I got started investing small amounts, $500, that kind of thing. And now here I am 10 years later. And I love it.
And so other than so I would say your point about the Berkshire Hathaway and the S&P 500, one is time value of money, meaning start.
Mm-hmm.
Just start investing. Because if you generate, I always tell people, if you just put money in the S&P 500 over 30 years, you're going to do great.
Yeah.
Now,
right.
Can you do better? Yes, you can do better. Where most people fall short is they don't even start. They don't put it into anything. And so the time part of it and the returns part of it are both super valuable. What other
you learn a lot more money when you see your money go up or down, especially when it goes down. You really want to know why. And so you're going to find out what happened and why, and if the company, if just sentiment changed temporarily, or if it's actually a company you don't want to own anymore. And that's going to teach you a lot more than taking investing class or
Right.
something.
Which is also something that scares people, right? I invested 10,000 and it went down to 7 and they freak out and pull their money out. How have you dealt with those? Because if anybody who invests over a long period of time deals with, I remember during the 0809 crisis, literally watching my account just plummet. I felt like curling up in a ball under my CNBC, watching CNBC on TV. So it was brutal. It was crazy. But like, how have you dealt with those ups and downs over time?
Yeah. So I'm a young millennial, and I think that we're probably in the best situation right now when it comes to like our relationship with investing, because in 08, I was too young to, I didn't have any money at that time. I didn't understand, I saw my parents and my friends' parents go through it, but it's a totally different experience when it's your own, your own money, and when you're responsible for paying things, when you're responsible for earning money, all those things.
Yes, trust me.
Yeah. And so, I didn't fully experience that. And then, there were a couple years that were, I took a buy and hold in companies that I understood, which were overwhelmingly growth companies. And then, we haven't really had, I guess in 2020, there was kind of a little, but overall, it's been, I'm in a really, I think young millennials in general who started investing early, I think to some extent we're a little bit in like la la land, So I do try to remind myself, like I try to like,
it could happen. Yeah.
Like I try to talk to people who have been through. I remember watching the annual meeting last year and the Berkshire annual meeting, and Buffett talked about how, I think $1 invested at his birth, like he didn't return it until 20 years later or something.
Yeah.
And so I try to remind myself that those things can happen. And I hope they don't, but
they will. They will.
But yeah.
What about, and so I love you and I have a very similar investing philosophy, which is very long-term buy and hold. That's what we do as a firm. Obviously in venture capital, most of the, the companies we invest on are illiquid. I tell people it's a feature, not a bug. When we invest in a company, it's illiquid for 7 to 10 years. Now, the good news is we invest at a $50 million valuation and we get out at, 10 billion if we're right. But you're doing that in the public markets where there is liquidity. And so tell us a little about your, and this has evolved over time, but a little bit of how you've developed that thesis and why you think it works for you and why others might want to look into having a similar strategy.
Yeah. Well, I think I first started doing it just because that's what all the people I knew who were good investors said to do. I don't like, they were like, buy and hold, either buy and hold good companies or buy the S&P index fund. That was all anyone ever told me. And so when I went to intern at the Motley Fool, throughout the end of high school and some of college. And they're big proponents of that philosophy as well. So, but I think now that, 10 years later, I can look back on it. I really see that, some of my biggest winners, like, Shopify, they're just companies that I bought and then I held. So I think now it's a lot easier to wrap my head around that concept rather than, the
because
ups and downs of the year, the earnings calls. Yeah. So yeah, I don't think there was anything special at the time when I first started investing. It's just everyone told me,
but a lot of people
don't be emotional.
Right? Yeah. A lot of people don't do that. And then, you and I were talking about this, like you watch CNBC, it caters to trading. It's like, trade this, trade that. And I'm always like, I tell people, don't do that. That's not how you as an individual investor are going to build wealth. You're going to pay a lot of taxes.
Yeah.
And you might generate these short-term bursts of returns, but the way you build wealth is buying something at 5 billion and holding it for 10 years till it goes to 300 billion. And so that's a hard lesson for folks to learn. Well, and you have things like Robinhood is geared towards trading. I mean, a lot of the newer media is geared towards trading. And so I think your mantra of buy and hold is an important one. That's how a lot of our parents' generation got wealthy, right? It was very expensive to trade back in the 60s, 70s, 80s, 90s. And so people bought and hold because it cost a lot if you tried to sell. But what about, and so then you combine that buy and hold thesis with kind of doing this like deep thematic, you find a company or a theme that you like and you go deep. Can you just talk a little bit about that? How do you do it and why do you do it?
Yeah. So I think I'm I'm incredibly founder driven. Like I will, when I'm making a decision about a company, I think I spend the majority of the time just observing the founder, like watching videos, hearing them talk, listening to earnings calls, those kinds of things, because I think that even still people tend to underestimate the importance of a great founder. It's just all the recruiting comes from the founder, all the culture comes from the founder, the strategy, the goals, product, everything.
Obviously that's our business.
Yeah, right. Even more so.
Yeah, 100%. Yeah.
But then outside of that, I think I don't try to predict. I think predicting the future is kind of a loser's game. I don't try to predict the future point blank, but I try to develop convictions in, things that I consider to be inevitable truths, I guess. Some of those are pretty popular, like gaming is important, I think, or like mobile e-com is relevant, like things like that are pretty well known. And then
they're well known, but then you go to the next level of saying, okay, in that theme, I want to go find a company or multiple companies, do the research and bet on it.
Yeah,
I think is the next step that a lot of folks don't take. Can you talk a little about that?
So I just try to align myself with founders who I think will take us to that vision or pieces of that vision. So, a good example is like I own, I've owned Mercado Libre for a really long time. And then I also own C Limited. And, these are really different companies, but they are definitely competitive in many ways in South America, especially Brazil. But I don't try to predict, one's going to win and one's going to lose. I just, they have great founders. They have great teams. Like they'll probably both do well. Maybe they'll have different pieces of the puzzle. Predicting the future is a losing game, but.
So in that example, I was going to ask you to give an example. So in that example, you sort of said, hey, emerging market e-commerce is a trend. It's going to be a decades-long trend I want to bet on. What was the next step you took to figure out which companies to invest in? Because that's always the thing that people hit me up with is, okay, digital money's a trend. Great. How do I figure out which companies to invest in? How do you go about figuring that out? Because you're in Mercado Libre and C, but there's a ton of companies you could have bet on. You could have bet on eBay or Amazon or Alibaba, or how did you decide on those?
Yeah. I think I really like doing the research and learning about what's out there. I think also, for work, I do user research, right? So I literally just sit there talking to customers all day about the products that they use, which is a great, foundation for making investment decisions ultimately, because that was actually how I first found out about Free Fire. I don't think I'm totally answering your question, but like, I guess.
So you enjoy the research part of it, but you've got this. Let's go back to the e-commerce thing. Emerging market e-commerce, like C Limited is a company that not many, we knew because obviously the company was founded and based in Southeast Asia, but not many people in the US knew about it. How did you discover that company, and how did you do the research and get passionate about it? Because it's been a great investment for you, I believe.
Yeah. So I've only owned it. I only bought it in 2020. So I think my return so far has been, there's an element of intrinsic value there for sure, but I think most of it is just short-term luck, market sentiment, whatever. So I first found out about it through research. I just heard about, people playing Free Fire. I had never heard of this game. I saw on Twitch that some of the biggest streamers were Free Fire streamers. And I was like, why does no one talk about this? Why has no one talked about this company? And then I just kept, I found out who it was owned by. And then I found Forrest Lee, the founder and CEO. And then, I was so impressed with him and his thinking and his thought process. And then, then I went on Reddit. I went on kind of like employee reviews, how excited people were to work there. And then I looked at, Shopee, and I just kind of looked at the whole vision, how they were piecing it together, and it made a ton of sense to me. It was crazy, but it made sense. Yeah.
It's a very venture capital style model of getting to your investment. That's what we do, right? We find these sectors that we like. We go find founders in those sectors. We do a ton of research to look at a bunch of different companies and try and pick one that we really like. But a lot of people don't do that in the public markets, right? They're just like, oh, I heard this is a good stock I should own. And so taking that next layer, obviously it's what you do for a living, but can you give us another example of something you've been researching or excited about over the last, 12 to 18 months that maybe people could say, okay, that's an interesting idea. I see where she's going with that. And maybe it might lead to an investment, already has led to an investment for you.
So, oh gosh, there's so many.
Without giving away all the secrets.
No, I trust. I give people are like, "What are you buying?" I'm like,
it's not really a zero-sum game. I
literally tweet
right?
everything I do.
Yeah.
Let's see. I think in general, I've been really excited about the creator economy, as has, literally everyone. I've been really, really excited about plant-based eating. This is one of my more like unpopular opinions that I get a lot of hate for on Twitter, but I really think that even with some of the valuations that these, some of these public vegan companies are getting, I don't think, while I can understand the criticisms of the valuations for those companies, and to some extent I agree with them, I also think the market in general does not understand how big of an impact like plant-based eating will have on the world. So that's one that is a little more unpopular, I think.
And how do you go from, because I gave a talk yesterday with a group of folks that are, sort of learning about investing, and how do you go from sort of, I like the category, I like the company, to having the conviction to actually hitting trade, buy, like that's hard for, even people who've been doing it for a long time. Like I have a company that I really like. I've been wanting to buy it, and I kind of forgot about it, didn't buy it. And all of a sudden it went up like 20%. I'm like,
I know, that's the worst.
Right. It's the worst. And so then you have this feeling of like, well, now it's too expensive. But the reality is, if you bought Amazon after it went 20% 10 years ago, you still made a fortune. So how do you get yourself to actually then, because you're investing your own capital too, which is hard.
Yeah.
How do you actually take that step to have conviction, and how do you decide how much to invest? And you don't have to give me specifics. I don't want to be too personal, but like, I think it's a really hard thing for people to get their heads around.
Yeah. Well, I try to never, I think every time I haven't invested in a company because it was too expensive, and I loved it, I regretted it. And I think that obviously that has a lot to do with my time frame. Like I'm thinking about, hopefully I won't liquidate, most of my portfolio for a really long time. But then in terms of actually making a decision, I don't know. I follow a lot of companies that I never buy. Or like I follow a lot of companies that I like that I haven't bought yet. I love
like
Five Below.
What's an example?
Five Below. I love Five Below, and I love Yeti. And I follow them both pretty closely, and I just have not bought them. And I'm like, why? But I think you just have to like not beat yourself up about it.
Another one for me is Celsius. Do you follow Celsius?
No, I don't follow them.
It's my daughters and my wife really like it. It's a kind of a weight loss or fat burning drink brand. And they told me about it, I don't know, 6 months ago, and it had already run up a lot. So I never bought it, and it's continued to go up. But
is this a meme stock? It has meme stock energy.
It could be, yeah. But it's incredibly popular. The brand, it's like taking off like Monster, Red Bull. It's kind of in that genre of brand. But of course, it's up, 12x in 12 months. So it's going to look really expensive, and it does look really expensive. But I'm kicking myself for not buying it, a year ago and catching. I know,
that's the worst feeling.
That is the worst feeling. But how do you think about sizing? And so because you're a personal investor, you're investing your own capital. How do you think about sizing an investment? Honestly,
I'm not very sophisticated with it at all. I just like when I have, more money, then I try to invest as much of it as I can. And then in terms of like, I try not to sell really anything. So I just kind of, if I want to make and usually I'm researching companies for a long time before I buy them. So if I last year I put like a more significant amount in C Limited than I normally would. And that was just because I had been watching it for a long time. I decided I really liked it. So wanted to put more in. But other than that, like if somebody looked at my portfolio, they'd probably be like, this is unbalanced. but I think one of the cool things about being a young person is like you do have more liberty to kind of act that way.
Yes, I agree.
So I definitely want to, take advantage of it, especially with, for now.
And I think the trends that you're betting on, whether it's gaming or payments or social or e-commerce, these are trends that are going to pay out over the next 10, 20 years. And so the other thing I try and tell folks who are younger is like, you can still come into Square or PayPal or Adyen today and probably make great money over the next decade if you're willing to hold for a decade. Now, if you want to trade in today, get out within 12 months, you might lose money. I can't really tell you what's going to happen in the next 12 months if rates go up or tax rates go up or whatever. But like over the long run, if you bet on these inevitable trends, cloud computing, digital payments, open source, social, all these things are fintech, obviously, is a massive trend around the world. And this is kind of me translating what we do as venture capitalists into the public markets. But I put up a chart, actually, I just posted it on Twitter today, showing people that you could have made, the best venture capital style returns if you bought Square after it went public. It was available to everybody. It was available to everybody for $10 to $20 a share for 18 months after it went public. And today it's at whatever it is, 15, 20x that number. So I think there are these, there are these incredible companies that go public. They're small cap names. Now, today, I would argue the valuations have gone up because they're staying private longer and multiples are higher. But you could still find great companies at $5, $10, $15 billion valuations that I believe over the long run are going to produce those same kinds of multiples. And so, it's fun because you and I have kind of a similar theme. Is there anything, any macro trend you think people are missing? Like you mentioned gaming. I think a lot of people underestimate gaming. I have 4 kids. My youngest plays Roblox and Minecraft. And I'm like, that kid is a complete digital native. The intersection of like digital payments, NFTs, crypto, gaming for him is going to be a no-brainer. It's going to be completely second nature. So that's one of my things where I tell people, like, if you're not betting on that trend, I think you're going to miss the 8 to 15-year-old population as they migrate upwards. Are there other things that you're excited about that maybe plant-based meat is one that obviously the general population isn't super bullish on, but what are some other things that you're kind of poking around at? Yeah, so definitely plant-based eating. I'm not deep in crypto, but I've been a fan and a holder. I guess that's not really a popular opinion at this moment. I mean, unpopular opinion right now, but a year ago it was very unpopular. Yeah. What else? I think, another one that's not probably unpopular is like, I don't hold Amazon. And like, I think that Amazon is a great company, but I've just always been way more excited about Shopify and what Shopify might be able to do for brands and for retail. Yeah. And it's been an amazing bet. Yeah. And that's another example of like, I bought Shopify because every single one of my friends bought a freaking Kylie lip kit, every single one, and I was like, when she came out with that, it was like, oh, like that's never going to work. Like an influencer starting a real company, whatever. But I was like, okay, the data is not matching my intuition here. So I should probably pay attention. And so walk through the logic there. So you see Kylie lip kit takes off. Then how does that direct you to Shopify? Because I think a lot of people don't quite get that. That's a second layer connection. Yeah. I think a lot of the articles when she first launched the lip kit mentioned Shopify. So I think I just had read about it and then saw which I hadn't even heard of at the time. But obviously like that trend has only accelerated more and more. Yeah. That's I think it's a great example of a company that, people were surprised at how big it could be when it was 10 billion. And now it's 150 billion. And they're like, oh my God, it's so big. It can't get any bigger. And you sort of look at it and you're like, well, if e-commerce keeps growing and they keep capturing market share, there's going to be a bunch of winners, Amazon and Shopify, and hopefully BigCommerce, where we're shareholders. One question from our audience. How much of your day is spent on TikTok, Twitter versus reading Substack versus reading books? Also, what types of books, nonfiction, are you reading? Biography, industry, business books? So it sounds like they're trying to get a handle on where do you spend your time, whether it's researching or just for fun? So I spend a lot of time on Twitter. I'm basically on Twitter all day, so I don't even want to know how much time I spend on it. I read, I love this one Twitter account, Daniel Sinclair, which I think I've tweeted and talked about him before, but he just has amazing analysis that spans all kinds of different industries. So I read his Twitter every morning. It's like the equivalent of like when I have coffee, I like pull up his Twitter and I just read whatever he's thinking. And then I actually have a book club, and I have all the books for the book club right here. So I can literally show you. Well, there you go. We can share them in real time. Yeah, we read Rainbow's End, which
is a great book for, literally anyone who's interested in like AR product.
Oh, somebody asked who's the Twitter feed that you check every morning?
Daniel Sinclair is his name.
Okay. And what's the Twitter
He's
handle?
probably so sick of me just like hyping him up on all this.
I doubt
He's
it.
like, can you stop?
I doubt it.
I've never even met him. And then this book, You Don't Own Me, it was about the Bratz versus Barbie doll lawsuit.
Oh, wow.
Bratz versus, or Mattel versus MGA, I should say.
Yeah.
Then I read this book, which was really popular, the Matthew Brennan book about TikTok, which is great. Reality is Broken by Jane McGonigal. It's about, this book was really good because I hadn't really thought about what makes games so much fun. And the book basically goes through how they put you in a state of flow, like a perfect state of flow. Like it's so easy to figure out what you have to do next. You get like a reward, you level up, you feel better about yourself. And so kind of it alludes to like, how can we design the rest of our lives to be more like that? And then we read The Year of Yes by Shonda Rhimes as well.
Oh, nice. Very cool.
So
what about podcasts? Are you into podcasts?
Podcasts, yes. Let me see.
One I would recommend for folks is Patrick O'Shaughnessy's Invest Like the Best. I think that's one of the best on investing.
Yeah, I love the SeaGraph podcast. I'm really interested in like 3D stuff. And, they go deep on animation and like metaverse type topics on there. They have a lot of like really incredible speakers as well. I love The Motley Fool. And I actually really enjoy Emma Chamberlain's podcast. So she's, for anyone who doesn't know, Emma Chamberlain's like a huge YouTuber. And I really enjoyed listening to the podcast because I feel like it's kind of this little window into Gen Z culture that I really appreciate having, just trying to understand. Yeah.
Very cool. A question from the audience. Have you ever been into any biotech? Will you ever get into CRISPR or gene editing therapy stocks?
Oh my gosh. I know so little about this field. So probably not, just because I don't understand it. I do, actually my sister-in-law she does bioinformatics. And so she's really big into this space and understands it really well. So maybe one day I'll kind of learn something from her.
By the way, I'm super bullish on this category. I think that this, there's a great book called The Code Breaker by Walter Isaacson on this space. I think crypto and CRISPR are two of the really cool, like next gen tech things that everybody's it's going to be like the internet a decade from now. People, of course, that's a big deal. Obviously, crypto is big among people that we know, but for folks who are a little bit older than us, it's not. So I've been recommending that book by Walter Isaacson, and then also a book called Digital Gold on crypto to people to read. Just to kind of get educated on crypto. A couple more questions. Let me fire away here. It's easy to assume a lot of info isn't actually priced into growth stocks when most investors aren't as digitally native as we are, meaning they might not even play games or use Shopify. Will early adopters always be ahead of the curve here, or will more Gen Z and millennial get into investing in part thanks to you, meaning there's less surprising growth to capture? This is an interesting question.
Wait, I don't think I understand the question.
Well, I think what they're basically saying is like, we have an edge because we understand gaming, we understand crypto, we understand TikTok, we understand these things that the older generation doesn't understand. But as more people get on Robinhood and get educated, do we lose our edge? I have my answer to this question, but I'd love to hear yours.
Well, I think there's two parts to it. One is that, while I agree with the general trends towards retail investing and, Gen Z becoming more social with their investing and Robinhood and things like that exploding, I also think that it's a little bit overstated because it's just been so easy to make money the last 2 years. Totally last year, the S&P was up like 15%. And then in 2019, it was up 30%. It was just so unbelievably easy to make money that if you're a young person and especially if you're a day trader, or, you want to do short-term trading, it was just a really easy time to make money. So that's just going to put a lot of people on the platform. I do think that when we have a downturn, like with every downturn, some people just are like, you know what, investing is not for me. I didn't like it. I'm not going back. And so I think that some of the behavior will go away if the market goes down again. So that's part one. Part two, I think that there will always be things that younger people do that older people kind of like miss, or don't understand. So, whatever Gen Alpha is doing right now on like iPads, like I'm sure there's a lot going on there that we're just missing. And they're gonna build platforms that we're not gonna understand. And then 10 years afterward, we're gonna be like, oh, that was so obvious, So
I mean, I'm older than you. That is true. The other thing I would say is there is always room for people that are willing to put in the work and do a little bit of research. Like, I don't think I remember when information on the internet became a big deal in the late 90s, early 2000s, everybody's like, oh, the Bloomberg terminal is going to go away. Well, guess what? Bloomberg's now a $65 billion company.
Yeah.
It's more, Wall Street is more reliant on ever. Why? Because it gives them an edge. It gives them information that you don't see broadly on the internet. And so I think this is one of the things I love about your model, and obviously our model, is if you're willing to do the work, you can find things that other people don't see. And it will give you that extra 2, 3, 4, 5x before the rest of the population says, oh, of course that makes sense. Of course I want to own Square when it's a $100 billion company, or Shopify when it's a $100 billion company. But people willing to do the multiple layers of research are going to be the ones that go discover Shopify at 3 or 4 billion. I don't think that's ever going away.
Yeah.
Last question. I know we got to run. Would love to hear Julie's view of Twitter and its place in the creator economy and the broader social media ecosystem.
Oh yes, I took a position in Twitter just last fall, so fall of 2020, and I have never received so many DMs before. People just being like, "What are you doing? like save your money!" Like people hated it.
Right, but you've been right.
Well, I've been right, but I mean, it was luck at that point, just consumer sentiment, just, investor sentiment change. But I love Twitter. I have a small position because they, I think even Twitter employees will largely agree that they hadn't had a great track record with execution. But I think that social is entering this really interesting phase where there's so many apps that just do way too much. And so Twitter does like one thing incredibly well. And I think in a weird way that actually makes it really approachable for younger generations to like come onto. It's like this real-time thing. It's a medium. It's not so much a place like Instagram or Facebook is. And so that was why I liked it. So I think that they're best positioned to capture a lot of these, really high ARPU revenue opportunities outside of ads. So things like subscriptions, newsletters. I'm really bullish on audio as well. Podcasting. I think they're best positioned to do all of these things. But I do recognize like the execution risk and whether or not they'll do it.
Yeah. Okay. So you have to pick one theme to bet on over the next 5 years. You're going to put, I don't know, some meaningful amount of money into it. What do you, by the way, this is a completely random question, but I'm just curious. Like I'll give you mine. I'll give you one, but pick one. You just said, somebody says on the street, hey, Julie, here's $10,000, put it in one thing for the next 5 years. What do you put it in?
Jeez.
Which I always tell people is like terrible advice.
Plant-based. I think it would be plant-based eating.
Yeah.
Or maybe like kids entertainment, like the whole system of YouTube is really broken. Kids YouTube is broken.
Interesting. So there's a next iteration of that's going to happen. It's going to be an unlock for content for kids. I like that.
I think so. Yeah. I think a lot of people don't go into kids entertainment because it's like not cool, but it's a really amazing, fascinating industry that
huge category.
Yeah.
Huge category and massively underestimated monetization in my view.
Mm-hmm.
Awesome. Well, I'll throw one out, which is, I think that there's sort of an unbundling of the Microsoft Office. There's 1 billion plus Microsoft Office users around the world. And I think you're going to see Smartsheet, Asana, Monday, a bunch of Airtable, a bunch of companies that are Notion, companies that are coming up in the private markets as well, that capture the hearts and minds of users all over the world and allow them to create websites and blogs and all these different things, kind of using the fundamental tools that were there in Office, but Office never took the next leap and sort of built it into a low code, no code platform, partly because the monetization is very different. But you look at the net dollar retention on those companies, it's insane, right? I mean, a customer that does $100 with them today does 140 or 150 the next year. The growth inside the user bases is phenomenal. And I own all three of those. I think that's a trend that's going to play out over the next 5 years that is going to be really exciting and really interesting. It's not super sexy, but I think it's a big opportunity.
Yeah, that's a great one.
Yeah.
I think nowadays it's like whenever I do anything, like whenever I have to like build something, like the first thing I do is just text 5 people and be like, what's the tool we're using these days for like websites or like design?
Yeah, and there's a bunch of great options, right? And it's not Microsoft.
Yeah.
So there's a lot of innovation happening in that space. And I think no code / low code is going to apply across a whole bunch of different industries that we haven't even thought of yet. Medical, supply chain, like there's just going to be this boom. And these companies today are only 5, 10, $15 billion companies. So I think there's a huge opportunity there. Anyways, Julie, this was awesome. I want to be conscious of your time. One of my favorite interviews I've done so far. I know you don't love to do interviews, but this was awesome.
This was so fun. Thank you so much.
And I really appreciate it. And keep doing what you're doing and keep sharing it on Twitter so the rest of us can learn from you.
Great. Well, thank you so much. I appreciate it.
All right, cool. Take care.
Bye.